The latest U.S. inflation data shows consumer prices are heading in the wrong direction. The Labor Department's Consumer Price Index showed that inflation rose the most it has in nearly 18 months. So what kind of pressure does that put on the Federal Reserve and on President Trump? Let's ask Eric Lynch of Scharf Investments. Eric, first I want to ask you, it's normal for businesses to raise prices at the start of the year, but what was it within this report that was really surprising or unsettling?
Yeah, Lisa, the issue with this report was that it marked the fourth consecutive month-over-month acceleration of inflation. So expectations were for about a 0.3% month-over-month increase. We got a 0.5. So yes, you can get some seasonality with year-beginning price increases from businesses, but this was a pervasive increase across energy, food, transportation, services, just a host of things. And that's problematic for the Fed.
President Trump's tariff proposals are seen by many economists as inflationary. He was obviously elected on the promise or the hope of bringing down inflation. In real numbers, when we look at his tariff proposals, how much will they actually weigh on American households?
It's very difficult to calculate. There's a lot of puts and takes. The last time we had these these tariffs, we didn't get a lot of inflation, but this time, what's different is that this is on final goods and products, which could really be taxed on a U.S. consumer. If you just use some blunt analysis and said, look, assuming we actually did get 25% rate increases on Canadian and Mexican imports, plus 10% on China, Lisa, that would end up being about $815 of potential increased prices to the U.S. person. So on a household, that could be up to $1,600. Unlikely we get that, but the point is we're likely to see inflationary pressures from these tariffs.
Before the report, Trump posted on social media that a Fed rate cut would go hand in hand with upcoming tariffs. How would a rate cut go hand in hand with tariffs?
Well, it would not. I'm still trying to square that circle, Lisa. Typically, tariffs are going to be inflationary in nature in the short to intermediate term. I guess what he could be kind of referencing is long term. You could reestablish manufacturing base in the United States and have a great economy and also hopefully not inflationary pressures, and you could also have lower interest rates. But for now, that's such a long-term event that it's really it's a really contradictory notion at this point.
A still healthy labor market has propped up the consumer amid high prices and higher interest rates. But how long do you think that can last?
Well, it does seem like post-pandemic, Lisa, we're at a higher kind of new normal of inflation than interest rates because the economy's okay. If you look at Powell's testimony the last couple of days in front of Congress, he's basically saying, look, the jobs are strong, economy's good. If earnings keep delivering like they have three-fourths of the way through Q4 earnings season, Lisa, then that will probably last. We're up 16% year over year for earnings. It's broad-based. It's 7 of the 11 S&P 500 sectors have earnings growth above 8%. And expectations for 25 are about 15% earnings growth. So if that keeps going, companies could keep employees employed and profitability keeps growing, then the economy keeps rolling.
But what kind of pressure do you think that this environment puts on earnings going forward? I mean, you said the expectations are still high, but really you see that lasting through 2025?
Yeah, it's tough to say. There's no magic kind of crystal ball, Lisa. But the good news is you're seeing strong productivity for calendar 2024. We had 2% plus growth, something we haven't seen in a long time. So that's positive. That will kind of support earnings growth going forward. Obviously, the wrench would be significantly higher tariff rates that could distort the economy and hurt profitability. The Ford CEO mentioned that they would be impacted severely by high tariff rates on steel and things like that. So there are some exogenous factors involved. But if cooler heads prevail on the tariff front, then probably the earnings growth will continue to be strong.